800-951-0592. Joe and Jason, Patriot Radio News Hour here on this Monday. A quick look in at the markets. The Dow is down 100 points right now. The S&P is up 10. The Nasdaq's up 70. Gold is up, depending on where you look. Gold's $19.60. I think Kitco's got it up $11 or $12. I say it's up $6. It's the same. $19.60. Silver, $23.65. You've got all the tools right here in front of you. You got to have gold and silver in your portfolio. It's not a maybe. It's a got to. You have to have it. Why? Because the currency is in trouble. Simple. How do we know? Well, look at the banks. This isn't even bad times, and we've got trouble at the banks. Look at the debt ceiling, right? We're going to pretend that we cut something. But we all know, because you listen to this show, all as they did was cut the amount that they promised to increase by a little bit. Over the next 7 years, we'll have a national debt that exceeds $50 trillion. And I have no idea what will be on the Fed's balance sheet. Whether that's, the $8+ trillion it has now, my guess will probably be closer to $20 trillion on their balance sheet, right? There's no stopping this freight train. They want a digital currency. They want more control over this thing. You have to have your gold and silver put away. You have to have the right financial advisor. And I'm telling you, if you have any doubt, call my son. He means it when he tells you. No one's going to outwork them, and they just approach things differently. They truly are, when you talk about financial companies, truly, truly conservative. And then, of course, it's like, hey, listen, I can't have all my money there. Check out our friends at Y-Refi. Another place that's not correlated to Wall Street. It's not. How about this? You don't even have to worry of what my statement's going to look like today. Binance is being sued by the SEC. Right, crypto's getting hit, down $1,000 today. Right, you don't have to worry about that stuff with Y-Refi. You get a fixed rate of return every single month after month after month after month. And I don't care if the Dow's up 5,000, down 5,000. They hike rates for another 2 years. They lower rates for 2 years. They start quantitative easing, quantitative tightening, debt ceilings. It doesn't matter. Up to 10.25% returns. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY, or call them at 888-YREFI-24. So before the break, we were talking about the debt ceiling. It's passed now. Well, guess what happens now? For the next 6 to 8 weeks, the Treasury has to reload. Okay, so as we know, before the debt ceiling, the Treasury was down to its last $20, $30 billion or so, which is that doesn't even get you a day, right? They were out of money, so they've got to re-up the checkbook, right? So first of all, they'd like a checkbook of around $750 billion. Well, okay, there's $700 billion there. But then you got to remember they were under emergency measures. So they weren't making all of the payments to pensions and government employees, and they were emptying out piggy banks from other parts of the budget. They got to put all that money back, right? So basically over the next 6 to 8 weeks, there's going to be another $1 trillion added to the deficit. And Jason, here's the problem. Guess who's got to buy this stuff? This is an extra $1 trillion. So the banks are going to be forced to be buying these treasuries, which means, hey, we're going to have even less deposits on hand because we got to buy this stuff, right? Because we got to keep the machine going, right? So we got to buy this all. And at the same time, remember, right, the Fed is still doing quantitative tightening, right? So that'll add, another 70, 80, because they're not achieving their goal, right? It should add a couple $100 billion. It won't be that much, but it's going to add, let's call it another $100 billion there. And Jason, that just makes these banks even more vulnerable. And now the talk is, hey, hopefully it's a pause, but it sure looks like the data is saying they need more rate hikes, which then again makes the problems with these banks worse again. It's almost like a double whammy. Well, we had to, we were trying to beef up our cash reserves, but now we got to buy all this stuff from the debt ceiling, so that gets strained, and now rates have gone up, and now our balance sheet looks that much worse.
It's going to crush a lot of assets because a lot of these banks and big investors are parking their money in the reverse repo market. There's money, mutual accounts, and and they're making it look a lot more appetizing to just park it in these higher interest rate vehicles, which just doesn't keep up with inflation. But it's something like you said that a couple times last week. So where are they going to take the money from? Well, they're going to take it out of the banks, right, Joe? They're going to take it out of their stock investments. Because if you can get guaranteed 5%, that's better than the possible recession of the stock market. And this will slowly just manifest itself. Property, I think, if it stays flat, is still going to be a loser with inflation. Very bleak future, Joe. And when it comes to the national debt, it's been doubling every 8 years, every almost 2 presidential elections. You had under Bush Jr., it was $5 trillion. He took it to 10. Obama took it to 20. Trump in first election of Biden, at the end of this, we're going to be hitting 40 at the end of Biden's next term, or whoever's there.
Well, that doesn't count, right? And that doesn't count the Fed's balance sheet, right? Because the Fed's balance sheet was only $700 billion, and then it went, $4 billion, and added another $5 billion or $5 trillion, right? So you're right. Every 8 years, it's a doubling, and that's what's so shocking. Because the number doubled, and yet you doubled it again, so that doubling is even bigger and bigger and bigger, and so when we sit there and say, hey, and then by 2030, $50 trillion, and I'm going to tell you right now, that's if we're lucky.
That's if things are going good.
Right. That's right. That's if it's good. I actually think it's probably going to be 60. Well, and again, you could say 60 with the Fed's balance sheet. But with the Fed's balance sheet, I would not be shocked if we have a national debt of $70 to $80 trillion. You remember, people want you to forget everything you ever learned. When I first started in this industry 20 years ago, the Fed would make a big deal about, it's okay as long as the budget deficit's only 3% of GDP. Well, it's over 10% of GDP now. Not okay. We'll be back after the break. (800-951-0592). Joe and Jason here on this Monday. Right now, today's special. It's another great one. Those $5 Liberties, congratulations to everyone that was able to pick those up. We actually ended up selling out of those late on Friday. Today, this is a hot one. $10 Liberties. So gold this morning, early this morning, gold was down. It was down almost $25 from where it is here today. And I got an opportunity on some more $10 pieces. I locked them in. And, of course, now gold's $19.60 and headed in the other direction. I've got $10 Liberties, $1,125. If you buy 20 or more, $1,120. And if you're on, help me, what are we on, Jason? Why am I drawing? YouTube. Right. YouTube. If you're on YouTube, Jason's holding them up into the camera. I don't know that.
Trying to get the picture from being blurry, but it's
it's a little blurry. Back it up away from your camera a little bit. There you go. Well, anyway, you get the idea. A half ounce of gold, pre-1933 U.S. gold. Why do we like the old gold? Because it's private. It's the most private way to own it. You can buy it, sell it, trade it, and you don't have to give out your Social Security number. You don't have to worry about 1099s, right? You're kind of on your honor. And the other part, it's the only gold the government considers collectible. Now, is that important? I don't know. All as I know is when the government confiscated gold in 1933, it was illegal to own gold in the United States with the exception of if you had collectible gold coins. You got to keep them. Now, a lot of people say, well, gold was the money then. It's not the money now. They won't take it again. Really? Oh, I beg to differ. Matter of fact, I think with the digital currency, the government is going to love all the things it can take away from the citizenry. So that's why we like the old gold the best. This price is spectacular. $1,125, 20 or more, $1,120. You're getting that fractional gold well below the 20s. That's been the theme most of the year this year. Continue to stack it in your portfolio. 800-951-0592. It's going to be a very interesting next 6 to 8 weeks with the amount of debt that's going to be issued. Now, one of the good news is your money markets, a lot of people have gone into money markets. You're going to see money markets snapping these up because they're offering you maybe 3.75, maybe 4%, but they can buy 3-month treasuries, 1-month treasuries. Heck, the Treasury got so low on money before they raised the debt ceiling, they offered a 1-day Treasury with over a 5% rate of return. So you'll see the money markets buying into this Treasury market because it'll pay above whatever they're going to be paying you. But the bigger thing is more pressure on the banks. Today's data was helpful for a pause, but right now, Jason, when we look at the data, we got a couple of weeks left here. And unfortunately, the way the data is looking, too many data points say keep hiking, not enough data points say stop hiking. I think it's going to be a tight decision.
We'll see what happens. I think they are going to stop hiking rates pretty soon. I don't think the Jamie Dimon 7% is going to happen, but I would not be surprised if they did 1 or 2 more, though. Just seems like there's a sweet spot there where they want to leave it, and I think 7% is going to be too high for them. But as you were talking about gold confiscation,
I don't think there's any chance. But I shouldn't say that. I guess it could, right? But I mean, how many banks do you want to close at 7%?
Right. Well, in the aftermarket, that's the Fed funds rate. Maybe the interest rates keep going up on the aftermarket because when these banks start having stress, they might just charge 10% on your mortgage, Joe. You just don't know where it could head. I mean, I never thought I'd ever see a credit card offer in my mailbox for 31% interest. I didn't think I'd see that, but there it is. And you were talking about gold confiscation. I wanted to just say there was one other kind of gold you could buy. After they made it illegal to own, you could get jewelry. But I'm going to tell you, if you're not happy with the gold premiums and the coins we're selling you right now, which is the premiums have been very high, go look at the premium on a ring or a necklace. Try buying gold that way, Joe. That's I went and bought some jewelry for Brooke some time ago, and I don't buy a lot of jewelry. I just it's not a big deal. Brooke's not a huge jewelry fan, but they talk about this stone or that rock, and then when you look at the prices, it all comes down to the amount of gold that's in that ring, really. I mean, the diamond has a little bit of a change in the price, but it really is the gold because the jewelry that's not in gold, that's in other settings, suddenly the price dramatically drops, Joe. It's just curious. Hey, here's this big diamond ring or this big emerald or something, and then you put it in silver, and suddenly that price of that ring just drops like a rocket. It's like, well, how come that emerald costs more than that one? Right? It's the same exact emerald. Well, it's because it's in the gold, Joe. So if you want you want to pay lower premium gold, and it is lower to buy it in coin form. This is the way you want to have it. Jewelry is great and all, but this is the way you want it.
Not even close. Yeah.
Not even close.
Jewelry demand, you're getting, maybe 20% of the price is the actual meltable gold in all your stones combined. The rest of it's for the artwork and the artistry, and then of course, as we know, jewelry business, that's a high commission business. That's how it operates here in the gold world. It's a single digit business. 800-951-0592. $10 Liberties, 1125, 20 or more at 1120. $800-951-0592. Joe and Jason, Patriot Radio News Hour, wrapping up this Monday. It has happened. China, for the very first time, had a domestic jetliner, the C919. It was a 700-mile flight. Obviously not a, huge flight, but still, it was the first domestically built jetliner that is now flying in China, the C919, and now is going to start competing with Boeing and Airbus. By the way, automaker BYD, Chinese automaker, just overtook Volkswagen to be the best-selling car in China, along with its rivals now going out to the rest of the world. BYD, by the way, Warren Buffett was a heavy investor. I don't know if he still is, but was early on. And, of course, Beijing also announced, Jason, they're going to put a person on the moon. So I don't know. Some people out there say we didn't go to the moon. Maybe we did. Maybe we didn't. China says, heck with it. We're going. And again, we bring this. Why does it matter? Well, we know why it matters. Because first of all, right, we gave them all the technology to build this airplane. We've given them this technology to build these automobiles. We've given them the whole manufacturing base. And Jason, these are high-ticket items for demand that used to be done in dollars, now going to be done in renminbis. Yeah, I don't have you, Jason. I don't have you. Sorry.
Am
are
I
you there?
muted?
Go try. There you go.
Am I there?
You're there. Yeah, you're there.
Yeah, the economic situation of the world is not settled by far, Joe. I mean, I know China is supposed to be the next big empire to take over things, but I wouldn't be surprised when the dust settles in the next few years if you start to see other countries economically rise in this thing. I mean, China, they look very much like the country that's going to take over, but Joe, I have doubts. I wonder how much trouble the world really is in economically. I've seen some models by some guys that says most of the economically powerful countries, that includes America, China, and such, all of them will start failing really badly. And there'll be other countries that will just rise out of nowhere, countries like India and Nigeria and things like this. So I think it's far from being solved. And I know this one thing, all of it says one thing: the dollar is not going to be a relevant tool. I don't think the dollar ever gets destroyed, Joe. I think it goes the way of the pound. The sterling pound, it was the world reserve currency. It never kind of went away, but it hasn't been relevant, especially since World War II, Joe. And I think that's where we're headed. And England really hasn't been a relevant country since, has it, Joe?
No, and I'm hopeful, and again, I'm using the word hopeful, which is never a great strategy. I'm hopeful that the dollar will be better than what the pound was. It's not going to be the player it was, right? I think everybody agrees with that, right? The dollar's not going to be what it was after Bretton Woods. I'm holding out hope that it will still carry a more weight than what happened to the pound, as an example, right? Because obviously the pound, it's only used in like 3-4% of all trade in the world, if that. So the dollar, I think the dollar is probably going to, fall below 50%, but still be a bigger player than its predecessors. But I agree with you, too. I think more countries are going to be like, hey, we're going to trade our own stuff. 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.